Good afternoon, everybody. It's Paul here. Here we are, Monday, 4th of March 2019. Here we are for session 29 of Mastering the 4Ms of Trading, the Admiral Markets webinar series. My name is Paul Wallace, I'm your guide. And as always, before we begin with the main content, we'll just start with a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying video is for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients can still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with the maximum payout of £50,000 sterling as per our negative balance protection policy. There are many good reasons to trade with Admiral Markets as your broker. You can see there that on two of their most popular instruments, the DAX 30 and the Euro Dollar, they offer very competitive spreads, and they also offer both the MetaTrader 4 and MetaTrader 5 platform, with also the Admiral Markets Supreme Edition plugin. Furthermore, Admiral Markets is a global brokerage with locations across the globe, and if you want to speak to your account representative, they'll be able to guide you through which is the best regulatory environment for you to operate within. So, as always, ladies and gentlemen, I like to set the expectations. It's for me to educate you about the 4Ms of trading so you can go away and analyze any market and be ready to trade it. I also will look to help you raise your self-awareness about managing risk and about managing yourself. For yourselves, ladies and gentlemen, what I ask is that I appreciate we do have a broad range of experience in the room and that we're under the time limitations of a 45-minute session, so that sometimes limits the depth that we can go into topics. So I always try and focus on tools that you could use tomorrow in your own trading. What we've always talked about in the Mastering the 4Ms of Trading is that it's about understanding those particular four key areas: markets, method, money, and myself. The more able you are to understand and master those areas, the more likely you are to be able to sort of deliver the kind of trading performance that you would like. Invariably, what we find over the years is that when a trader is in complete control of those 4Ms, that's invariably that is when they're in the position to sort of to deliver their best trading performances. Alternatively, if you're having a challenge with one area of your trading, well, then you can very quickly try and sort of nail down which one of those 4Ms is the challenge sort of coming from, and that help you sort of start to dig in and guide you to finding the solution to your own trading challenges and obstacles. And hopefully during this series of Mastering the 4Ms, we're going to be touching upon some of those challenges that traders have and what we can do to sort of help ourselves in terms of overcoming those obstacles, and also sort of making a plan good enough that we can, wherever possible, sort of avoid those traps that are there for us. So, what we said we would talk about for the first sort of first good part of the sessions of the Mastering the 4Ms of Trading was I talked about how it's important to have yourself a little routine, okay, almost a little process that you can follow time in, time out, that basically keeps you on the right side of the tracks, prevents you from doing anything too foolish, and just make sure that you're covering the most important bases, as you go through your trading experience. We sort of talked about having a kind of a 10-step process for you to just follow, just to begin with, just to help help you get into almost the sort of the right groove with your own trading, because I've talked about it a few times, is that Confidence comes from confidence, and competence is, competence is a skill, and skill is a drill. All right, and being able to follow a simple process is what enables us to become confident in what we're trying to achieve. So, for Hope, this series, for the other sort of 28, 29 sessions that we've been on, we've gone through these sort of 10 steps. And, what we'll do is we'll quickly flick through them because, we've finished the first 10 steps of it. And if you remember rightly, those of you who've either joined us for the whole series or if you've been watching on catch up, well, then, we talked about the first step, whenever you open a chart, all right, is, just look to define your levels of support and resistance. Step 2, define if there's a trend. Step 3, look to see how price reacts at those key support and resistance levels. Step 4, look for price action signals at those levels. And then step 5, is it part of a bigger chart pattern? We also then talked about is, step 6, define risk. Define your risk, accept it, and stick to it. Step 7 is all about knowing what your reward is. Are you going to use a target or are you going to have a trailing stop? It's important to know your exit. Step 8 was about recording. Step 9 was about reviewing your performance. And step 10, which is what we touched on last week, is about repeating it. And in terms of developing consistency and discipline, which are absolutely key. So we'll just go through that as a quick reminder. If you remember, step 1, define levels of support and resistance. Right? Whenever you look at a chart, look at the monthly, the weekly, and the daily charts and draw in those horizontal levels of support and resistance. And also use big psychological round numbers also. And, we talked about also being able to use fractals to help as well. It's just being, regardless of whether you are a 4-hour swing trader, a 5-minute intraday trader, whether you are a long-term position trader, just ensuring that you know where those big major levels of support resistance becomes important, because we don't want to be buying into resistance, we don't want to be selling into support. It starts to give us a framework within which to see where the market is likely to move. Because what we realize is that markets tend to move from those particular areas of support and resistance, which are very similar to areas of supply and demand. Remember, step 2 is define if there is a trend, all right? Remember what we talked about, we talked about elements of Dow theory, how we just want price to be making higher highs and higher lows for an uptrend, and lower highs and lower lows for a downtrend. I talk about it, I talked about it every week, saying that, actually good trends will leap off the chart at you. You shouldn't really have to force yourself. If you're forcing yourself to see if there's a trend there, well, then the likelihood is there probably isn't a trend there. So, you can see here in this chart, which I put up there, you can see, on the far left corner, you can see where the price is, in an area, okay? Price is, in an area of consolidation, okay? It's tightening up. And then very clearly we can see that the price is in a very nice uptrend, okay? As I said, good trends will leap off the chart. You don't try and force it. Step 3 was, looking to see how does price react when it gets to those key support and resistance level. And if you're going to sum it up in one word, that word would be confluence, okay? That's what we're looking for. We're looking for a confluence of events to happen at key levels. That's where we start to get interested. That's where we start to look at being able to sort of do our business. Step 4, well, then, we was about looking for price action signals once, when price is at those levels of support and resistance. And we spent quite a few weeks going through, looking at price action signals, how they can be trading setups for us. We went through all of them, because I like to sort of provide you with call it like a toolbox of setup signals that you can utilize. I also realized that, as new traders, they love they love setups. Okay, they love looking at opportunity setups. Excuse me. So if you remember right, we went through looking at pin bars, rejection candles. We also had a look at engulfing candles. We went through inside bars and the different way to trade them in terms of in line with trend and also as breakouts. We went through a 3-bar reversal, which was just a very, very simple mechanical trading setup. We also looked at key reversal and momentum reversal candles. We looked at the combination between sort of key day reversal and the 1, 2, 3 pattern. We talked about using the power of the 20 moving average, and we looked at how we could utilize the 1, 2, 3 pattern. So, we went through, sort of 8 kind of, various setups and variations of that. The whole idea was to, as I said, to just give you a bit of an insight excuse me, a little bit of an insight, a little bit of sort of exposure to different sort of trading price action signals, the different sort of setups, also to sort of identify within different market environments. But invariably that's what people like to see. They like to look at and sort of understand all those sort of different price action signals, and we, as I said, we covered them for a good few weeks. Then, if you remember, we looked at, well, we want to try and understand, was price part of a bigger chart pattern? That was what step 5 was about. We looked at continuation patterns, things like bull and bear flags, ascending and descending triangles, and symmetrical triangles. We looked at some reversal patterns, especially things like head and shoulders, double and triple tops, and also a little bit of cup and handle. As always, as I say, to join these sessions, if you want more detail on those patterns, well, all of the videos from those sessions are in the Admiral Markets YouTube channel or the Admiral Markets Facebook page. So be sure to go on there, and you can go and have a look at them on demand or when it suits you, and also get sort of the deeper detail and insight that you might be looking for. Then, if we looked at step 6, which is all about risk, okay, in particular risk management, we looked about how to prepare your trade, how to go about position sizing. What we talked about was how we need to identify what is our trade risk, okay. Our trade risk is, let's say, the number of pips or the number of points between where we enter and where we're exiting, okay, for if we're wrong, and dividing that by our capital risk, okay. If you remember, our capital risk is the total amount that we are to sort of risk on one trade. If you remember, we talked about that we never risk more than 1% on a particular trade. Furthermore, that by dividing sort of capital risk by trade risk, that allows us to identify a position size, which is sort of size per pip movement based upon our trading account. It's actually not that, it sounds maybe difficult, but actually once you do it a couple of times, it becomes quite simple and second nature to do. But it's also unbelievably important to make sure that you can understand risk management, that you apply it, that you follow it, that you know how to position size your trades, so that it gives you the best opportunity for survival and then thriving. Then, if you remember, step 7 was about reward, all right? Okay, the flip side of the coin to risk. Step 7 was about reward, and we sort of boiled it down to you've got one or two simple options. Are you going to actually have a target that you want to hit, or are you going to sort of be trailing? Are you going to hope to harvest more pips using a trailing stop? And that is partly said that is a personal choice. As I say, for myself, I personally like to prefer to use targets. I will occasionally use trailing, but generally I sort of kind of like to use targets for myself. But there'll be other people who'll say the exact opposite, okay, and that's absolutely fine. It's about knowing which is the one that actually works best for you and that you can actually follow consistently day after day with discipline. And then what we've gone through over the last few weeks was the last few of the sort of the first 10. Remember, if we talked about step 8 was recording, okay, and always sort of utilize this great quote by Alexander Elder, okay, show me a trader with good records and I'll show you a good trader. He's absolutely spot on there, absolutely 100% right. It's in all my years of trading and being on trading floors and working with traders, and it's absolutely true. Show me a trader with good records and I'll show you a good trader. It's absolutely spot on. And so please take that, if you're not keeping good records of your trades at the moment, please take that on board and make an endeavor to sort of change that in this first quarter of 2019. And it really, we just talked about, you're looking at 3 basic records: your spreadsheet, your trade journal, your equity curve, and then also understanding your grade card, which is about actually grading your trades, which is what you can see there. Okay, and it's important to understand that you grade a trade for performance, also for execution as well, and it's actually the execution that we are understandably keen to look at, because that gives us a good insight into how closely you are following your plan. Talked about making sure that you fill in a trade journal, okay? Capture all the details of your trade, but also your feelings on the trade, and very important, what did you learn from the trade, okay? What did you actually learn? That becomes super important, because that allows us to make progress as we looked in step 9. Step 9 is once you've collected those records and collected your data, well, what we need to do is to be able to review it. We want to actually see how we're actually doing as a trade, not how we think we're doing, but actually how we are doing. And so we talked about at the end of each day, make sure you review your trades, right? And then again, the same at the end of every week, and then also at the end of every month, all right? And you use the data within your Excel spreadsheet to work out some KPIs, some key performance indicators. Things like understanding your excuse me, win-loss ratios, your risk to reward, and your expectancy ratios, so that you're in a position to understand the developing trends. I do apologize. So, what we're talking about is, when you're talking about reviewing your trades at the end of each day, week, and month, what we talked about was how, the more you do that, okay, the more you go over that, the more it sort of locks in your the learnings from those particular tradings, both on the upside and the downside, okay. And the more you do that, it helps you sort of cut down your sort of timeline towards becoming the trader that you wish to be. We also, want to understand some of the useful KPIs that are out there that we can use. Things like the number of trades placed, numbers and/or your percentage of winners losers. People want to know that. You also need to understand, what's the sort of average size of your winner, okay? And what's the size of your average loser? It's also useful to understand even things like what your average time is in this trade, and understanding what your sort of numbers of your longs versus your shorts. Okay, I always talk about how about 2/3 of my trades are shorts. That's because it's I just find it very much easier to identify short trades. I'm actually not really any more particularly profitable on my short trades than my long. They just seem to, when I see the trade setups, I just seem to see them much easier than I do with my long trades. And all of that data can start to go towards you actually trying to identify what level of expectancy you can have in your trading. Do you have positive expectancy, which is whereby you expect to generate generate profit over a certain set of trades, or alternatively, have you got negative expectancy where over the long run and over sets of trades you would be expected to lose trades, or lose profits, lose funds. And actually, that's what we want to do, is we want to basically make sure that we're in a position to sort of always be nudging our way towards our positive expectancy, and invariably making sure that we are avoiding negative expectancy as well. So here's another good quote from Mr. Elder, which is about keeping good records is the single most important contribution to your success. If you maintain scrupulous records, review them and learn from them, your performance will improve. And I wholeheartedly endorse that message. Absolutely wholeheartedly endorse it. As I said there earlier, that all the good traders that I have seen or worked with, not only do they keep good records, okay, but they effectively look at to review them and learn from them, all right. And by doing so, that's it's the best way for your trading to move forward. And then that actually sort of brought us to step 10 of the first sort of 10 steps within our trading plan, which was all about repeat, okay? We're looking to repeat that process in order to build consistency and discipline. I talked about how, professional traders, they tend to have rigid rules and flexible expectations, whereas new traders, amateur traders, they tend to have flexible rules and rigid expectations. And that's, it's a very key, it might sound a bit of a subtle distinction, but it is an unbelievably key one to sort of to take on board. Professional traders have rigid rules and flexible expectations. Amateur traders have flexible rules and rigid expectations. That's enormously important to understand. So, if you remember what we talked about last week, was about, well, how do you actually do that? How do you actually do that? And how do you become professional with your business? How do you build consistency and discipline in the way you operate? Well, there's, if you remember, we talked about a lot about it, okay? And, if you wanted to boil it down into a very simple way to look at it, It's basically a simple plan is, plan your trade, trade your plan, manage your risk. That's exactly what we're particularly looking at. Plan your trades, trade your plan, manage your risk. That's exactly what we're looking for from traders. All right, and that's actually quite simple. Um, it's quite easy to achieve for traders. Okay, although some traders make it their life mission to break those kind of rules or plans. But if you can plan your trade, trade your plan, and manage your risk, okay, then you're in a good place. You're building consistency and discipline. And it's I found over the years it's very hard to be consistent without being disciplined. It's very hard to be disciplined without being consistent. They both work very well together. They kind of reinforce each other. So any way that you can help do that within your own trading will be beneficial to you, I assure you. So, what we can do to build that in is to actually how we can turn that into something we can do is about actually developing a couple of little plans. So we have, firstly, a tactical trading plan, how you engage with the markets day to day. That's your tactical trading plan, which, lo and behold, is exactly what we've really been covering in these 10 steps, how you engage with the markets on a day-to-day basis. And a strategic business plan, okay, is how you plan to run and build your trading business. All right. Now, all good businesses have a strategic business plan. All right. Doesn't matter whether you are a one-man trading business, or whether you're Apple, or whether you're BP, British Petroleum, excuse me, or whether or whether you're HP or company, whatever. All good businesses will have a strategic business plan, all right, about how to run and build your business. And you as a trader should be no different. And as part of that, you'll have a tactical trading plan, which is about how you engage with the markets on a day-to-day basis. And that's what these 10 steps have been, okay? They've been helping you develop that tactical trading plan. So, I talked about how, lots of people talk about, well, why bother with one for trading? It just sounds a bit dull, it sounds a bit boring, all right? But remember, it's about being a professional with a business. And as I've just said there, all sustainable, profitable businesses have a strategic business plan. Even then, in the fast-paced world that we live in, there is still the no excuse for not having a plan of where you particularly wish to go to. And in traders, it becomes actually even more important. Because without them, okay, without a good strategic business plan, a good tactical trading plan, what you find is that traders start to struggle, okay? Start to struggle with, overconfidence when they're doing well, right? Or so if they're overconfident, they start to sort of ignore their risk management principles, all right? Start actually looking to effectively trade bigger size, okay? Or, just basically busting their risk management principles. Or they look to have a need for variety. Okay, they get bored, or they start wandering off the ranch and start trading setups that aren't within their trading plan, because they are bored and they're looking for a bit of excitement, or they feel like they need to be trading. What do I mean by that? It's a case of the people have been conditioned, okay, through their society, through their education system, through the work that should be doing a fair day's work for a fair day's pay. And so they feel that if they're going to be sat in front of their screens for 8 hours, okay, doing 9 to 5, well, then they actually need to be trading. They need to actually be pulling the trigger on positions and putting trades on and off. And actually, that very often is a poor way to operate, because it just encourages over trading, and over trading rarely ends well. So, how do you go about creating a strategic business plan? Well, it should include the following, right? Who are you, okay, and what's your purpose for trading? It's key to understand that, okay. What are your motivation, and what are your trading goals, all right? And those trading goals don't necessarily have to be financial. If anything, they should be more should be more focused around the kind of the process that and the mechanics of what you're actually doing. You also need to be very clear about the markets, the instruments, and timeframes that you're going to trade, what tools that you will use, what's your routine. Remember, we've just talked about that on the sort of the 10 steps. Also, be very clear about your risk management and your money management. Learn and understand what if any contingency plans that you have, or that you require. You have to be very clear about what trading systems you're going to utilize, and also touching upon how you record and review your trades. All right, how do you go about that to make sure that you make sure you're not missing out on that and getting the most value out of it as possible. So, if you remember what we talked about there last week was that, in conclusion, amateurs see those strategic business plans as a waste of time, all right? Whereas professionals, they see it as an investment that develops and improves performance. So your question for yourselves, ladies and gentlemen, do you have that strategic business plan and a tactical trading plan, all right? If you don't, well, I just ask you to make a commitment to creating them going forward, okay? It doesn't have to be a 100-page document, okay? It can simply just be a couple of pages. Just go back on those slides, look at what you need to touch upon, and just sit down and write it. Force yourself to do it. It's always a very, very beneficial experience, and it will help you develop as a trader. And now the question you have to ask yourself if you won't do it is then, are you an amateur with a hobby or are you a professional with a business? That's the kind of question that you need to sort of look at asking yourself. So, there you go, ladies and gentlemen, okay? So it's a case of, remember that we've got this 10-step tactical trading plan, which you can take away and use, and we'll have a little look at it for the last few minutes, all right? Whenever you open a chart, all right, whenever you open a chart, just be very clear to start defining your levels of support and resistance. Step 2, define if there is a trend. Remember, we talked about how it can be, prices above the 50 to 200. That can help us identify if prices in a trend, but the good trends will always leap off the page at us. Step 3 is, look to see how price reacts at those key support and resistance levels. The key word is confluence. Once it's there, we'll then maybe look for see what price action signals, okay, or setups show up there that at those particular areas that give us an opportunity to take a trade. And also just be aware of, is it part of a bigger chart pattern that might be playing itself out. Be sure, as always, to define your risk, accept it, and stick to it, all right? Risk management isn't that difficult, but people make it harder for themselves than it needs to be. Also, just, understand your reward, okay? Are you going to targets? Are you going to be trailing? All right, the important thing is that you decide before the trade is placed. Regardless of what you do, make sure you keep scrupulous records like step 8, and make sure that, at the end of each day that, you review your performance, okay? See what you can learn from it. And then step 10, just repeat it, okay? Session by session, day by day, week by week, month by month, quarter by quarter, because consistency and discipline are key. And it's actually how you do that in those small elements, okay? Those small parts of the way you operate, they'll actually help you be consistent and disciplined in the sort of the bigger elements of it also. So, what we're going to touch upon for the future sessions is we're going to start to build a portfolio. We're going to start to look at how we can identify sort of trade setups based on that tactical trading plan. What we'll also be touching upon a few weeks down the line is about managing myself. We're going to be looking at that a little bit more detail about how do we go about managing our performance as traders. How do we go about recovering from a slump in performance, and what are the things we can do to always improve our existing performance? As we go in towards the summer, we'll start to look at sort of a shorter term trading ideas, and also we'll revisit some of the 10 steps, but with the let's say the additional insight of some advanced trading tactics based around the kind of points that we've covered in the sessions over the last couple of months. So, as always, remember, ladies and gentlemen, it's important for you to sort of manage those 4 M's of trading: markets, method, money, and myself. Just ask yourself very quickly, right now, are they all in alignment in your trading business at the moment? If they're not, well, then you shouldn't expect outsized returns, all right? But, it's a case of if they're not, well, then you've made the first step towards trying to identify why are they not aligned? What can you do to help put yourself into that better position? So I hope that gave some useful food for thought, and kind of going through those 10 steps and starting to use it to build yourself up as a little routine, little process for traders. As always, if you have any questions about this webinar or the rest of the webinar series, then you by all means get in touch with Admiral Markets. You can call them on that London number 020-7726-4003. You can drop them an email at hello@admiralmarkets.com. As I said, all of these sessions are on the youtube.com/Admiral Markets channel, or on facebook.com/Admiral Markets global page. So as I said, I hope you found that useful. We've got about 5-10 minutes. So what I thought I'd do is, as always, I'll just try and switch across to the charts, and we can have a little look at that for the sort of the last 5-10 minutes. As always, I appreciate people enjoy that. As always, if you want more sort of in-depth trading analysis, market analysis, then be sure to join me at the real-time daily trading ideas every Tuesday morning at 10 a.m. That's where I'll go through and do a little bit of market analysis, and that market analysis, which is based precisely on what we have covered and touched upon, okay, in the Mastering the 4Ms trading webinar series. That's what we'll be looking at, and we, as always, I'll touch upon that there. But if just bear with me a moment, I will just switch across to the charts, and we'll have a little bit of a look at what's going on in some of those major markets. Super. Okay, so here we have this is the charts here. Okay, just very simple, all right? Very simple, like what we've touched upon in our webinar series. I have sort of green bullish candles, red bearish candles. There's a blue 20-period moving average, simple moving average. There's a red 50, and there will also be a green 200. And literally, this is the monthly chart of the dollar index. We can see here. Okay, we'll touch upon that in a bit more detail. How we can do that. What that actually means. We'll touch upon that in a sort of a future session. But realistically, as I said, I'm just opening up, okay, and just looking to identify levels of support resistance. You can also see that I've got some fractals, okay, on there, which are covered. If you want to know how to put fractals onto your chart, whether it's MT4 or 5, go to Insert, Indicators, Bill Williams, fractals. Okay, you'll see you'll be able to decide and choose it there. What we can see is, what I'm interested in is that, I can see there's lots of areas around about 92, okay, where there was clearly fractals in the past where prices pushed down and pushed away, pushed down, pushed away, okay, pushed down, pushed away. So there's clearly been some elements of support there in the past. And so, just be looking to identify, significant levels of support resistance based off that on the monthly chart. Then go down to the weekly chart. Start to just zoom out a little bit. Of course, you can see there's a bit more on there as we've drawn in patterns there, but just starts to give us an idea of what we can see in terms of the pictures and patterns. What we looked at is, here at the moment, I'm just looking at, is there a head and shoulders pattern sort of forming there? Left shoulder, right shoulder, head. That's step 5. All right. So I'm interested. I'm intrigued to see how what we had in the dollar index was this 95 level was a significant level of support and resistance. So you're sort of saying we just want to identify where there is support and resistance. Is there a trend? Well, there has been an uptrend in dollar index. It's been a bit scrappy over the last few months, and we actually have, the fractal here has shown us that we've got actually a lower high, but prices, we're still getting higher lows, okay? We're still getting higher lows. This price is just grinding its way up, and we're waiting to see, how price is reacting at this level of resistance. The week it kind of dropped away. Today, in the last few days, it's kind of drifted back up there. So we look to keep an eye on that. If I go down to the daily chart, well then, I'm interested in looking at, significant particular levels of support resistance recently. But, I'm actually quite comfortable because, we've actually drawn on lots of them from the monthly and the weekly. So, we're identifying that. We're pretty clear on our zones there already. So, I'm quite comfortable with that. What I'm kind of intrigued in here, and this is what I talked about in the real-time daily trading ideas, is that, you can see that this is a daily 200-period moving average. Okay, it acts as a pretty significant level of support, and we can see price actually rallies up there. Then what we talked about is, this then printed a key day reversal. All right, so remember we touched upon that in step 10 under one of the step 4s. All right, but key day reversal, price pushes to a new high. Okay, pushes to a new high, but it rolls over and closed beneath the low of the previous candle. So it's showing us that there has been a bit of a turnaround, and we can see that actually for the next week and a half, price actually just, it fell away, and that was a very simple, easy trade for us. Until, towards the end of last week, we started to see the 50 period was acting as support. We've had a little bounce off there, and we'll keep an eye on that. But just look at one or two of the others, okay, just to sort of give you a bit of an idea of what we're, the sort of how what we've talked about in the Mastering 4M so far is, what we can see and utilize on our own charts. That's what the whole idea is about. This is the let's say, this is the monthly chart, okay. Euro against the dollar. I want to sort of just capture the extremes, okay. When I see that, I'm intrigued to sort of see that, and, the fractals as well are helping me there on the monthly chart. If I go down to the daily chart, well then then we can see that I'm kind of curious around about here as well. But a lot of the levels are already drawn in terms of significant wise. What we can see here is that this one here, it's about 113. It's actually just a big round number here that has acted as support as well at the same time as having the weekly 200. But here's an interesting thing is that, I talked about this in last week's real-time daily trading ideas. I felt that price was getting squeezed between, the support level at the base, but actually also the power of 20 period moving average, which is something we've seen here on other charts. It's one of the setups that we've discussed and talked about. You can see here that price, every time it pushes up above the 20 period moving average, the next day it gets battered down beneath it. Comes along here, we just close just a smidgen above it, and it actually gets battered down there next day. Then it tries another time to get above it, and once again, it's actually closed. It's forced back there. So, what's actually happening there is price is getting squeezed. It's getting squeezed from the top, okay? The bears are squeezed from the top. But then also what we've got is the bulls underneath, okay? Underneath that 113 level, there's lots of bulls there. And so what we're seeing, that's why we're seeing price just tighten up, tighten up, tighten up. It can't carry on like that forever. At some point, it will actually sort of just explode. But, this is us just making use of what we've seen, okay, what we've learned to help us build our picture. The dollar Swiss franc, okay, the weekly chart here, this is understanding about the importance of big round numbers. In terms of what we have here is that's just one. That's there's parity there, and we can see that realistically since since about sort of May, June time of 2017, getting towards 2 years ago. So one has acted as pretty significant resistance. Okay, I know the attempt in November did try and push its way through, but actually we can see that it just faithfully just fell away there. And so it's just a case of prices. Literally, I'm just watching price batter around that one parity level, and we'll see how that plays out. But it's interesting, once again, as I said, we don't want to be buying into resistance, okay? We don't want to be buying into that number, because we can see from the past that it's actually acted as very significant resistance. And if we have a look at the pound against the dollar, here, just go up to the monthly chart. So just, I want to sort of, as I say, always capture and draw in the extremes, looking to sort of see where there are particular levels or zones of support resistance that I can start to get interested in. Going down through the charts, well then we can see that actually we've had a little bit of a rally. We've had, certainly for the last part of last year, we actually had a tough sell-off. We actually we double bottomed. Okay, if you remember, we talked about double bottom, price pushes up, price comes back down, and here we have the power of the 20 period moving average here. You can see it there. It's acting as dynamic support there. We can see the price falls into it, turns around, and then flies up there. Okay, and just even going from that, okay, from like 129.59, okay, 129.59 to 133.50. So there's nearly 400 points of profit there just in those two moves themselves. Which as let's say as a swing trader, even as a position trader, you'd be very pleased to sort of take a piece of. And if we look at dollar Swiss franc, okay, we've had a look at we've had a look at the dollar index, we've had a look at euro dollar. We've had a look at pound against dollar. We've had a look at dollar Swiss franc. If we also have a little look at dollar Canadian, okay, let's just go out these are charts. So let's just, as always, monthly chart, just draw in the extremes and start drawing in levels of support and resistance. Okay, just doesn't take very long, and MetaTrader is very good in that it keeps keeps all your levels in there. Okay, so it'll keep you up to date with them. Okay, there's no case of it being sort of manipulated in that sense. So it's a case of just trying to make that work for you. Then if I go down to the sort of weekly chart, let's have a look. Okay, so we can see on the dollar Canadian, okay, the price has been grind its way up. But what kind of interests me today, what we're looking at is, talked about how price here was getting into a coil, all right? Price was actually coiling its way up. We're stuck between the 50-period moving average to the top side and the 200 to the bottom side. We can see that price was just moving back and forth. We actually had a very, very, very small sell here, okay? Very small sell as actually price sort of kind of drifted back down towards the 200, and actually you can see that it just showed itself up as a bit of a pennant forming. That's just a sign that the dollar Canadian dollar is winding up. Okay, it's getting ready to explode. We don't really fully understand why, but we're keeping an eye on it just to watch that. So by all means, add that to your watch list. We can see it's broken out there a bit today, and I'll be interested to see how that closes later on this afternoon. So there you go, ladies and gentlemen. There's your lot for this week. I hope you found that useful. I wish you the very best of success in your own trading, okay? And I look forward to speaking to you soon. Trade well, ladies and gentlemen. Thank you. Christine says, thank you. Good webinar. Thank you, Christine. It's very kind of you to say. Rolf says, thank you, Paul. Have a good trading week. Very kind of you, Rolf. I hope you have a great one as well. Phil says, thanks, Paul. Yeah, you're very welcome, Phil. Great to have you here. I look forward to speaking to you at our next session.